Hi everybody, it's Christian from Serene Education. It's going to be doing the four majors for the forthcoming week. That is the 11th to the 16th of January 2015. Okay, always starts with my monthly time frames, and I'll work my way down through the monthly, weekly, the daily, the 4 hour. I preferably trade on 4 hour and 1 hour entries, so I like to do my analysis pre-weekend, during the weekend, apologies, to give me an idea what's happening, what's likely to occur for the following week. Okay, so straight away what we can do is you can either do support and resistance levels, gauge long-term trend, or the other scenario would be you can either use a pivot calculator or look at fib retracements. It's going to give you a quick outlook on a pivot calculator, order pivot indicator on the chart. I want to have a look at I'm not really interested in the dailies, so I'd rather use, let's have a look and see, just by keeping that, and change that to a month. We'll look at the monthlies to start with. Okay, so there we go. Straight away you can see it's plotted the monthly prior month. So this will be the month of December, and now these are the projections for the coming month of January, taken off the prior month of December. Open, high, low, close, and you can see the monthly pivot itself is above price where the institution moving averages, and it's also our price support and resistance level. If you look back, and it's also the 2010 support. So euro is trading below a major support and resistance level, a major support that had been in effect since 2010. In fact, you can see here price trading below the institution moving average was also a very negative indication, and you can see how this month has progressed. We've seen further selling, aggressive selling since the start of January, right through into the monthly support one, and vice versa through to monthly support two. We've seen a consolidation now as it stands for the month at support, monthly support 2. So effectively, if I'm looking at the indicator box on the hard right edge, you can see that my long-term sentiment is one of negativity, and the R squared is indicating I should be looking for genuine selling sentiment. And you can quite clearly see that on the chart we should be looking lower for this particular pair. The fact that we actually closed low on December below a major support and resistance level that goes back 4 years, in fact, is very much a negative sentiment candle indeed for the next quarter. So you should be looking for selling, a continued selling for a weak euro going forward. So on the monthly, you can see that we're trading into a major support and resistance level. So what I'm going to do now is I'm going to also drop down to the weekly time frame. You can see this box pops up and it tells me that, sorry, on my weekly I still have a sell signal. And if I look at the weekly indicator box over here, you can quite clearly see that all my indicators are pointing, are red, and the R squared is complementing that selling sentiment. So it's telling me it's genuine selling. And you can see how the monthly fib, we saw hesitation going into that level. However, this bearish engulfing candle cancelled out those 2 prior weeks of consolidation at that support, and we saw the breakout, and you could see quite clearly we should have been targeting the monthly support 1, which is where we saw price heading to for the start of the new year. First week of January, you can see how price actually pulled back during the start and then fell through to S2, and then we've seen a slight consolidation at the close of this week. So going forward now, ideally, if we are to see any further selling, because we should be looking for selling, then we'd like to see price actually closing lower than this monthly support 2, which is at 117819, for further selling opportunities in a negative trend. You can quite clearly see that we are in a negative trend. The candlesticks are red, all moving above price. My OSMA, my RMO, everything is telling me I should be looking for selling. Therefore, this week coming up, for me to see any further selling opportunities, here we go, get down to the daily. You can see we've seen consolidation on Thursday and Friday. I need to see a daily close lower than the monthly S2 here for me to then target the next monthly S3, support 3 level, and that would be a gauge where we should be looking for the continued, or for the remainder of January, in fact. So looking low, there's still another 300 pips between those 2 points, and there's enough clearly on the table for a valid return on time invested. However, we would need to see price closing lower than the current support level here at 117819, which is currently a pivot point, a monthly pivot point S2. So clearly get below that, and then we could target that level down here at 114676 for the forthcoming week. Moving on to sterling, there we go. Naked chart in front of me on the monthly time frame. Let's go ahead and put the FX8 template on there. Straight away you can see how more visual it is impacting. You can see here, looking at the indicator box, you can quite clearly see the long-term sentiment is still very much favoring negativity. My monthly, weekly, daily is negative, and the R squared is complementing that setting, so it's telling me it's genuine. You can, however, see that price is now consolidating on the monthly at a major support and resistance level in the past. A support and resistance level that pretty much was in effect for the first 6 months, in fact, or more, of 2013. So now if I'm going to look for any major support and resistance levels in this negative trend that we've seen through the latter part of 2014 going into the new year, it's going to go down to my pivot, water pivot calculator, apply that. I don't want to see days, so let's give that false. I could plot the weeklies on, but I just want to put the monthlies on. I like looking at the monthly support and resistance levels, i.e. the monthly pivot points. And you can quite clearly see now that the monthly pivot is way above price here on the weekly, after consolidating through most of the October-November period, and then getting some setting through December, very negative December in fact. Broke through monthly support 1, support 2, and you can see our price is now trading at monthly support 3. Okay, so we're clearly at a major support level here. You can see price at the start of this week was in fact quite negative. However, by the end of the close of the past week, you can see price has pulled back and is actually physically closed above it. So looking forward now to see any further opportunities further in a negative trend. You can quite clearly see that sterling has been falling. This is a weekly chart. You can see how negative it is. All the moving averages are price, RMO is below, the OSMA has been below, and the color is dark red, so it's telling me I should be looking for selling. You can see my indicator box is telling me I should be looking for selling. The only thing I've got to really worry about now is major support and resistance lines, and you can see that price has consolidated at 1 right now, and the next likely one is going to be, if we get below that monthly support 3, then we should be looking towards these lows right down here at 14758 and change. And what's the difference between those 2 points? You're looking in excess of 250 odd pips. So there's clearly, there again, there's enough money on the table for time invested if you do get that selling indication. So when we drop down to the daily time frame, you can see that in this case we saw price actually spending Wednesday and Thursday below the monthly S3 level at 151436, and then on the close on Friday we actually saw sterling putting back aggressively after those 2 indecisive candles to the downside, and it's closed back up above that 151436. So now it's back above a prior support and resistance level. So looking ahead for the new week, we would need to see, if we are to still look for selling sentiment in what is a negative trend for sterling against US dollar, we would need to see price getting back below that S3 level once again and breaking the current support level on your, let's have a look at there on the 4-hour time frame. There we go. So roughly below, let me just change the color so it stands out a lot better. Let's go for a nice bright yellow and make it nice, super stand out. There we go. So we would need to see price getting back below the monthly S3 level, as I mentioned, but primarily you can see the candlesticks on our 4 hour still are red, so it's telling me it's still negative. I do have a blue arrow though, which is telling me I should be looking for consolidation, and clearly we have seen consolidation through most of Friday. So now if I were to look for further selling in a negative trend, I would then need to see price reverting back in the direction of the current negative trend. At the moment now, it's clearly consolidating, or ranging is probably the best word to use. So then, therefore, I need to see price reverting back and closing ideally below that 150434 and change to then target that 148758, which is our current long-term support lows, as our first target for the remainder of January. So as it stands at the moment now, I've got to see price reverting back. You can see here my RMO is still telling me everything is still looking negative. However, you can see the MACD, or the OSMA, is clearly above the 0 level. So it's clearly consolidating. So therefore, I've just got to be patient enough to wait for price to then revert back to the direction of the long-term trend. And ideally, getting below that 15434 mark would go a long way because then that it should be back below the 0 level and dark red to tell me I should be looking for a continuation in a negative trend long term. Moving on to the US dollar Swiss franc. There again, starting with the monthly, you can see a naked chart. I'm just going to apply the FX8 on here. There we go. So now you're looking at the euro. If we go back to the euro, you can see that the indicator box over here is, well, you know that price or euro is quite negative against the US dollar long term. Therefore, when you look at the US dollar Swiss franc, you should see the total opposite, because they are a pair that correlates quite well with each other. So the US dollar Swiss franc would be the total opposite of what the euro US dollar is doing, and you can quite clearly see here is clearly telling us that. So the long-term sentiment very much to the upside. So monthly, weekly, daily, all looking positive. However, you can quite clearly see intraday, it's totally different. Okay, a lot of negativity, and the R squared is complementing some of that negativity. Looking at the long-term setup of this particular chart, you can see that we're very much in a negative trend. You can see the current highs, resistance highs. You can see prices now trading at that level now in the monthly. You can see also long-term is a major support and resistance level where price is trading right now. Price support, resistance going forward. So we're at pretty much a crossroads now for price. You can also see the RMO for a long period of time was below the 0 level, which was a negative indication. However, the last couple of months, you can see the RMO price is actually trading above that 0 level. So genuine sentiment to the upside, which is great. However, you can quickly see now price is now likely to headbutt or find a bit of resistance now as we head into a major support and resistance level, or currently trading at a major support and resistance level. So now when I go now to apply my auto pips to this particular chart, let's get rid of that false, just apply the monthlies onto this particular chart. There we go. You can see that if I just move this yellow line out the way, there we go. You can see there the monthly fib levels already at that level. So now if I drop down, straight away I get a buy signal on my weekly, and that concurs because everything is in order for a buying opportunity on my weekly. You can see that price is moving higher with momentum, all looking good. You can see the monthly pivot point is below price, which is a price support and resistance level high. We broke above that, and currently the last 2 weeks, the last week of December and the first week of January, moving higher. You can see price trading above the first monthly resistance level. Price actually consolidated on the end of December into that resistance. Now you can see the first week of January, price has actually tested the resistance 2 level. Okay, you can see the RMO is still very much to the upside, still telling me I should be looking for buyers to the upside. My OSMA is bright green, telling me I should be still looking for further upside. You can see that everything's looking good. However, that trend line I drew on my monthly is clearly in the way. Okay, that long-term trend direction. Make that nice and strong so you can see it is still there. So when I drop down to my daily now, there we go, I get a buy signal on my daily, and you can see concurs. Everything on my daily is looking fantastic, and the R squared is complementing that buying sentiment. Even though I'm looking for buying, you can quite clearly see I have a major resistance level above me in 2 fronts, both the monthly resistance 2 level plus my long-term trend resistance level above price. So now, if I'm looking to buy with long-term trend, which is up, I would need to see price making a new high. In this case, breaking and closing higher than the monthly R2 level to make a new high. So this week, in fact, if we are to see any further upside, would need to see price closing higher than the monthly resistance 2 level, which is at 101949 and change, but also above that trend line, that downtrend over here. So if you want to put a trigger alert to close above the prior daily high, i.e. talking about Thursday's high at here at 102147, go ahead and do so. Put a trigger alert above that to see a daily close above that. And as long as she's still pointing in the direction of the long-term trend, then look to target the next resistance level high, which will be your monthly resistance 3. And where price is trading right now to that, or the Thursday high to that level, you're looking in excess of 230 pips, which is more than enough there in terms of to profit from. So you're just going to be patient here again, wait for the break sometime this week, and then you'll have a likely target up here at R3 ahead. Finishing off with the last pair, which is the US dollar Japanese yen. Here again, naked chart. Okay. Here again, you can see that we have seen this particular pair falling, but we've seen a major move to the upside for a very strong US dollar against a very weak yen cross. So templates, let's apply that FX8 on here straight away. Buy signal on the US dollar Japanese yen on my monthly. Here again, you're starting to see a bit of hesitation creeping in. If I just move this to the side, you can see that the indicator box, the monthly and the weekly, still very much positive, and the R square is complementing that. However, we're starting to see a lot of negativity creeping in, but you're seeing that already. You can see where price is trading right now on the hard right edge compared to where she had been trading in the past. And you can see that we are at pretty much a major support and resistance level high. The December past 2014, you can see that the actual month closed indecisive. It still closed higher than the prior high, which was the November high, but indecisive. Okay, so there's indecision now because we are trading at a major support and resistance level high, i.e. the 2005, 2006 resistance level. Okay, so now when I draw my pivot point onto this, let's just go and find it. There we go. Bring it onto the chart. This one, the monthlies. There we go. Bang them on the chart. Perfect. You can see what's in play right now. The monthly pivot, which is this brown line, is prior major support and resistance. Okay, and you can see how price has actually been at that level recently. Okay, and you can see that price actually closed higher than the monthly pivot. So we should have been targeting going into the first week of January, of 2015, i.e. January the 1st. Look towards the monthly R1. So that monthly pivot now needs to be remain below price, supporting her to support, because remember we are on a positive uptrend. So now we look to major support and resistance levels to actually provide support and resistance. So if price is trading above it, then that major support and resistance level is just broken through, now needs to become the new support. So when I drop down to the weekly time frame, I just want to show you this so you guys can see it a lot clearer. You can see that end of November, in fact, we actually saw price breaking above that monthly pivot level. There we go, the monthly pivot. There it is in brown. Broke above it, so we should have been targeting that monthly R1 level, and price almost got there. We saw a greater pullback in the start of December, and then we've seen price pretty much sitting around that monthly pivot level. The candlesticks haven't changed color. So even though we've gone into consolidation for December, the overall bias still favors the upside, okay, because the candlesticks are telling us that. It's when the candlesticks start to turn red, then you start to consider, or you should see further consolidation or pullback momentum. So here, blue still confirms that we should be looking to the upside. You can see the last couple weeks going into the end of 2014, price became even further indecisive. A lot of indecision candles, very small trading ranges. Okay, it still was trading above the monthly pivot. However, the close of this week, in fact, has seen price closing low in that level. So now looking to the new week, as long as this monthly pivot level now remains above price, it should then resist price from moving any higher, therefore pushing her lower, and then we should be looking to target the monthly S1 below as our first target for the new week. So if I drop down to the daily now, you can see that price has failed to make any new highs since December, the early parts of December. And if I draw a trend line, resistance trend line above that, you can see that the highs have got lower. And especially through the last part of December, you can see that we also have a resistance level on a number of occasions here. But the overall trend is still low. Okay, and you can see that we're trading below that monthly fib level, this dashed line over here. So the candles are still, however, on my daily, blue. Okay, and if you look at the daily over here, you can see that the institution moving average, which is the MA down the bottom here, is still below price. There we go. Still likely to support her. My RMO is still blue. True. However, when you look at the MACD, it's red, and it is red. And you can see that there's been more action below the zero level than above it. Okay, and that's clearly because price is being consolidated now. Okay, the MACD is used primarily for trends, and you can see quite clearly that we haven't been in an uptrend. We've clearly been ranging, moving sideways. So if she fails to make any new highs going forward, there's more likely to be further bearish sentiment coming into the market, because if they can't find the momentum to move higher anytime soon, then you're likely to see. So therefore, we're going to start closing those positions and then exiting their positions, and then price is likely to fall over. And you can quite clearly see if she falls over, we have a valid target one area, which is back towards the monthly S1 level, which is below us, which is the prior support and resistance level. Okay, and you're looking in excess of 200 pips to that level. So looking towards this the next week, as long as this monthly fib level over here at 119090 remains above price, she's then likely to resist price from moving higher again. Therefore, she's likely to fall so lower. Therefore, we should be looking towards the downside, okay, for the coming week. If we are to see any further bullish movement with long-term sentiment, we would need to see price breaking above the current resistance level high, which is at 120693 to start with, and then we could target back up towards that monthly R1 again, which would be the case before we target R2, R3, and vice versa, further highs in what is a long-term uptrend for the US dollar. Okay, so that's it, short and sweet today. I hope that made sense. I hope you enjoyed that session, and I'm hoping to see you guys in the forum. If not, I'll catch you same time next week. Until then, you guys trade serenely.